Welcome, ladies and gentlemen. I got good news and bad news. Let's start with the bad news. I believe the majority of traders, and maybe even you, tend to use the wrong points of liquidity because you're not using time-based liquidity. So you are marking incorrect highs and lows in order to trade off because these are the incorrect points of interest. In today's video, I'm going to show you, and this is the good news, how to properly line up your time-based liquidity every single session so you can have pinpoint accurate points of interest. Stick throughout this video because it's not going to be long, and I guarantee it, I put it on my trading reputation that you will have improved trading tomorrow if there's a major session trading. I'm going to go through right now, and you can see this on the screen, how I made $8,500 this week, and this is in 2 days, right? The week, it is 9/24 right now. There's still 3 more trading days in the week, and I've already made $8,500. This is specifically because of time-based liquidity, and I'm going to explain to you how you are going to be able to find this every single day right before your session opens. Now, the first thing I got to do is show you guys the proof. We sent this in the Discord before. I said QQQ calls. If we run Asia lows, I double the position. Inevitably today, as of September 24th, we hit our target in the morning. I said no sells. Previous week high will be our first target, and then we ended up doubling the position, and as you can see here. So let's actually just get right into the charts and kind of go into this and explain in theory why we believe that these are more important levels than any other higher low you can have. And the best part about this is it's mechanical. You can never mark the wrong higher low after watching this video. So this was the trade today. We had a 6:30 a.m. market session open. So New York session opened all the way up here, and then market dropped, came all the way into our point of interest, previous day Asia lows. We took entry and then ran it all the way into the weekly highs and then equal highs. If you're in Playbit, you'll know we talked about this on Sunday. So now, for those of you that weren't able to be in that weekly call, I am going to explain to you how you're going to be able to figure out the analysis behind it and do it for yourself every single week and every single day. So how we're going to start this off is by removing all of this data and going over exactly what happened today and how you could have taken advantage of this. What we're going to do is use the replay feature here, go to 6:30 a.m. and show you exactly what we saw pre-market and how you yourself can find the exact same thing. So the first thing we need to note is time-based liquidity is based off of 3 major trading international sessions. We're going to have Asia session, London, and New York. There are overlap sessions that we're not going to bring up because these are the highest volume sessions that bring the most fruitful liquidity into the market in which we can trade off, and that becomes our point of interest. So today I'm going to show you exactly using this indicator where these markets are trading and at what times. So as we can see, going into today's session, September 24th, we had the daily, this is the current day Asia session and London session. What I am looking for is the previous day before that session. Asia and London is right here. So what I'm going to do is I'm going to mark out the low of this session, and I'm just going to, quite frankly, label it as the Asia low. Now, I want to also explain to you why I believe these time-based points of liquidity even have value. There's the NQ futures market is perpetually trading the entire 24-hour time frame. You know, there are some kill zones, of course, but during this period, New York, London, and Asia, banks, hedge funds, massive institutional traders are trading each of these sessions, especially their algorithms that are automatically trading them. So the Asian and London session have a lot of significance going into New York because a lot of the same liquidity from London and Asia is now in New York. So the rebalancing of portfolios and positions happens every single time. So usually when I think of futures, I think of Asia, London, New York all being the same session, but specifically when in New York, Asia has especially important levels, and when in New York, London has, you know, special levels for you to mark out depending on the relativity to New York session. Let's get into that right now. Asia's low is the exact same as London's low. So Asia and London have the exact same low here. This is an very important level. I'm going to put it as Asia's low because the massive drop occurred right at London open and Asia close. Now, the important part about this is the day before. Keep that in mind. It's very important. The day before. You don't want to mark these Asia lows here. I do not believe these have much structural value given the current session. I think it gives value on the previous session, right? So we're going to play this out and kind of show you the reaction from this level. As you can see, the markets drop right into Asia low. And what is the most important part of time-based liquidity as well? Well, time-based gives us another key piece of information. This is what we found on Sunday. This is what I want you guys to do is you're going to go to the 1 week time frame, and you are always, as you're trading, going to mark out the highs and the lows of these sessions. This is previous week high, and obviously previous week low is way down there. No reason to really mark that one out right now, only because of how far away we are from it and the likelihood of it hitting. So we have this high marked out here, and we're going to call this the previous week high. This is exactly how this trade came to fruition and how I made $8,500 in practically a single session. This is the previous weekly high plus, if you look on the 1 hour, equal highs as well. So a whole bunch of confluence for price to trade up here and then also get rejected. I'm going to move this to the top, and there you go. You now have your entire game plan ready. As the Asia low swept, we took longs immediately, and I'm sure everyone remembers the session immediately came up to previous week highs. That's time-based liquidity right there in a nutshell. You must understand where the liquidity lies in the previous international sessions. So that's London, Asia. And also how we can see here is if we go to the daily occurrence, right? If we go to the daily occurrence, we can see that during Asia London again, the previous Asia London session, what happened? Price came up, swept Asia highs, and then made its move down to sweep Asia lows, and then came up to sweep the point of interest of external liquidity, which is previous week's equal highs. Now, you can do this for literally any session. Take the replay feature and go back to any session you want and check out the importance of the highs and the lows of those sessions, because it is extremely valuable and mechanical, which is one of the best parts about this idea is time-based liquidity. You can't get it wrong. It is at the high or low of a major session, which you cannot get wrong. There's no discretionary there. And on the daily and weekly time frames, you just take daily highs and lows and weekly highs and lows. You cannot be wrong. That's why the simplicity of this model is perfect. It's not even a model. It's literally just an idea that you implement into your model. I implement this into my ILM model. But this helps you understand the best points of liquidity. And I'm going to do one more thing to help you guys understand this again. As you can see, that's the Asia low. But unfortunately, a lot of traders who didn't understand this use the Asia low from the daily session, from the current session, and then also would have used this Asia high plus London high, and then not only that, they would come down here, and then they would have their London Asia overlap. So a lot of traders who ended up moving, and we'll have 5 minutes to show this in a little bit better light. A lot of traders who ended up attempting to trade the long position off of the current day Asia low got chopped up. Obviously, they were targeting the highs. They had stops at the lows, and then their stops got ran. I mean, their stops literally got ticked and then immediately moved back up. So if you've ever been in the market before and you've entered a trade, it was going well for a bit and then reverse all the way to your stop loss, only for the stop loss to be the next point of reversal where it then skyrocketed all the way back to your take profit. Well, chances are you're simply just using the wrong highs and lows. You're not using the previous day's international session highs or lows, or the previous day high and low, or the previous week high and low, or previous monthly high and low. Trust me, it sounds very simple, and you're like, it has to be more complicated. ICT said this, yada yada said this. Go try it. That's the beautiful part about this, is I can show you my trade model all day. I made a 40% profit on my entire portfolio in a singular month just using this concept, in addition to my already sound models, the ILM and the ORB model. And you can see my daily P&L curve just up forever the entire month. And this is what I'm trying to get you guys to, is you understand that you can get to the point where your portfolio sees constant wins and then a loss, and then constant wins and a loss, and constant wins and a loss. This is how the trading looks. You don't have a 100% win rate. My win rate's 80%, which, to be fair, is pretty good, but over a 3-month span, I can show you that even a 61% win rate netted a 76 R return, and I was trading crypto. So keep this in mind. Time-based liquidity is more important than your random lows or your random highs that you're labeling out, especially if you're trading futures. Trust me, tomorrow or the next session after you watch this video, mark out the previous day Asia lows and highs and watch how price reacts to them in the next session. Now that we have had all of these Asia lows and London highs hit on September 23rd, on September 26th, 2 days after, I delete those levels. They are not relevant to me anymore. I believe the algorithm works day to day. So you need to have the previous day's highs and lows, and then after one 24-hour period passes, delete them and move on to the next. So that is your lesson for today. Time-based liquidity in under 10 minutes. I hope you guys use this at least once because it is proving extremely fruitful to myself. And I know a lot of you want to have stats like mine. And why not do what I'm doing to produce these results by just choosing the correct highs and lows? That's it for today. I am Bitcoin Playboy, or better known as Ty. I will see you guys in the next video. See ya.